Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Wednesday, June the 28th. The year's 2023. Let's talk trading. Not doing what we should with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, why don't we do what we should?
Well, you have an expression for that. You call yourself a maroon.
Yeah, I know.
And sometimes, I hate to say it, but, we all do it, and sometimes it's so true. We absolutely know what we're supposed to do, have a plan to do what we're supposed to do, and we just fail to execute. And when we fail, to execute, what happens? Sometimes we get lucky. We've been talking about luck a lot lately, but, sometimes you'll get lucky with that. But you know what? A lot of times you don't. And I'd rather go and try to, I think I said it in the last video that we manufacture our luck. I think the expression I used, make the bed that you sleep in.
Right.
And I think there's some truth to that. And sometimes, unfortunately, we don't do what we're supposed to do. And the next thing we know, we're sleeping in a bed we don't want to be in. And we just have to be cognizant of that,
Yeah, but the thing is, we both do it, and we do it almost every day. In fact, there was a couple days ago, I sent a chart. I go, look at this mess. And then yesterday, you were in a trade, and it's like you go, I should have gotten out. I should have gotten out.
Yeah, and the thing is, and the worst thing about it was, I even said to you, because we were on call at the time when it happened, and I said, I should get out here. And I didn't. And, and I got really lucky that I actually was able to end that trade with some profit. But the reality is I could have gotten slaughtered if the market had gone against me any further. And, not slaughtered to take me out of the ability to trade, but slaughtered out of, and, in terms of maybe it would take me out of being able to trade for that day, and it just, I think we also talked about greed last week, and I think a lot of these things, they all play into it. You have this greed, it's type of thing. Okay, the trade is not working out. It's obvious the trade is not working out. Okay, got a little bit of profit. You know what? Let's just go and exit here and just wait for a better opportunity. That's what you should do. But because I know that price is going to go here, and we get so pig-headed sometimes, and we become our own worst enemy. It's the type of thing, like even this huge drop that we've had today, we both were in at 2,700. And if you look at that, I did get out and I made, I don't know, let me go and tell you, I made 8 pips on that trade on the way down, which was great. The fact that I made 8 pips. And then, but the problem is that, I made 8 pips and I got out at exactly where I was supposed to get out. But then you go back and look at the chart. And if I look at this chart, I could have made easily another 30 or 35 pips more. And then you start thinking, and you wind up having, at least for me anyway, you start, dreaming about gumdrops falling from the sky and how you could have made so much money, and that would have been, for me, 2 days worth of what my goal would be for 2 days, and I would have gotten one trade. You start thinking about all those things, and the next thing you know, unfortunately, what can happen is you go into your next trade, and you say, I'm going to hold out and get my 35 pips, but the trade doesn't warrant that. It just, depending on what you're doing, the trade just may not warrant trying to get 35 pips. The trade may only be worth going and trying to get 2 or 3 pips or 5 pips or whatever it may be. And I think, for me anyway, I'm just being transparent here, I get myself into those cases, where, I become my own worst enemy, is because I don't go and do I failed to execute what the actual plan is. And I've said this before, and I'll say it again. When you're getting into a trade, you should know what your exit strategy is. You should know where you plan on getting out. And at least for me, for the type of trading I do. You know, if you're doing seat pants type trading where you're just going to go and you know this thing's going to break and it's going to break hard, and you're just going to wait for price action to stop for you, you know, hey, that's great. You know, that's the type of trading you do. That's not me. That's not my plan. And so when I go off script like I did yesterday, that's when I get into trouble. That's when I have a problem.
Yeah, and the thing is, I was in that short too, and why did I get out? Well, it was simple. There was a one ball, and it hit and I got out at 95, which I know is a bounce point, and it's like, yeah, well, sometimes it goes from 95 to 90 to 75 to 60 to 40.
Yeah.
And what did it do? It did exactly that.
And that's what happens, you know. And and the thing is that the problem is, and I know it's hard to do, but you can't, those guys that go and say, don't look back at your past trades, while you're trading. There's some merit to that, because the problem is what they can do is they can start influencing you where it takes you off track. It takes you off of your plan. It takes you off your game plan. And if your game plan is only to make 2 or 3 pips, like mine is, and if price action is moving in your direction at that moment in time, try to get more. But as soon as a flag goes up, get out. And if you're all of a sudden you're looking and say, well, if I would have only done this the last time, I would have been up 3 or 4 pips, but then I would have been underwater for 3 or 4 pips, no big deal, because then it shot down 35 pips. You start doing that. Next thing you know, you're going to, depending on what your trading plan is, or your method, not trading plan, but your method is, you can sit there and all of a sudden take, 3, 4, 5 losses in a row with those 3 or 4 pips, because you're hoping for that 35 pip move. Well, the thing is, if you're looking to get 35 pips, develop a method to get 35 pips. If you're wanting to only make 3 or 4 pips, develop a method that you only get 3 or 4 pips. And then just make sure that your risk and your money management's in place so that you can make it profitable. That's the secret of trading. What you got to do is you got to go out there, figure out what your method is, and then wrap your risk management and your money management around it so that the odds are stacked in your favor for the long term. And that's where the hard work comes in, because you got to sit there and figure that stuff out. And part of what makes it really tough is, we talk about psychology so much on this channel, but the reality is, what can your stomach take? If you're looking to get to 35 pips, well, you better be willing to go and take a loss of 15 or 20 pips or more. That's just the reality of what you have to do if you're trying to do it. If you're the type of person where you're not willing to take that type of loss or that type of drawdown before you got to 35 pips, well, maybe that game's not for you.
Exactly. But the question though is really, why don't we do what we should do? I mean, there was a trade today. I got in, and I think I could have taken a pip. Or what happened was I averaged in, and I could have taken a pip. But for whatever reason, I didn't do it, and then it tanked against me, and it was like, okay, why didn't I get out there? It's like, should I have gotten out there? And that's the hard thing, because sometimes you don't want to do what's called resulting, because you have to make decisions in the moment. You can't go back and play the woulda, coulda, shoulda game. But the thing is, you know what you should do ahead of time, but you don't do it. That's the problem.
Yeah.
And so the question is, why? It's like, there's something that's overriding that, and it's like, is it greed? And the thing is, usually it's not greed. It's interpreting what you see um, contrary to what you should do.
Yeah, yeah, I agree with that. It's the type of thing where, you see what's happening, and what's happening is that for whatever reason, you're just not executing what you're supposed to be doing. And, and the thing is, part of it's greed. And I think the other part of it is there's this other fear that we haven't talked about in a while. We used to talk about it a bunch, but this fear of missing out and the fear of losing, and we don't, as humans, we just don't like to go and admit that, hey, we were wrong. We don't, as human beings, we don't like to admit that we're wrong. And, there's the old adage, the old rich guys who sitting there, who have made so much money, and why are they still in the game? And the old rich guy says, I'm in the game because it's a game, and money doesn't matter. It's just a scorecard.
Right.
And that's kind of what it is. I think sometimes we get so caught up on the scorecard, and we don't want to admit that we're going to take an L. Guys, we just we can't be even Michael Jordan took L's.
Yes, he did.
And that's how we have to look at things. We just have to say, hey, that's just it's a stepping stone. So like the country western dance, right? Two steps, 2 steps forward, 1 step back, right? Well, if you're still doing 2 steps forward, 1 step back, that's okay. Take your 1 step back, catch your breath, and take your next 2 steps forward. And just treat trading that way. It's okay to take a loss.
Yes, exactly. But the thing is, I still think there's like there's something like, in our brains, in our psyche, that causes us to not do things because we think the future is going to be one way, as opposed to focusing what's going on in the present. But in trading, we are not necessarily predicting the future, but we are saying it's going to, we're thinking price is going to go up, or we're thinking price is going to go down. We might not say it's going to hit a certain number, but based on what we're seeing, we're going to say price is going to do one thing, but sometimes it's just smacking you in the face. It's like, no, we're doing something different. And the question is, why is it so hard, or why do we make it so difficult to determine what price is actually doing? I mean, we're sitting there looking at the chart. I mean, we were both short at, 2,700 or above, and it's like, why did we not think price was going to continue? And when it's right in front of our faces.
Yeah.
And I think it's because we got money on the line and we don't want to lose, so we we take those small wins and then we kick ourselves for not staying in the trade.
Yeah. And I think that, you hinted at something there that's very important. You take those small wins. Now, here's the thing. You can be happy with that small win, although it's hard when you look at the big movement. But the thing is, if that's what you're trying to achieve, be happy with your win.
Exactly.
But we don't like to do that. And I think that that's part of just, there's a word for all this, and it's called delusion.
Yeah, grandeurs of delusion. But
I think we're almost out of time here, sir.
yes, we are. When we just hit top of the hour about 4 minutes ago, new H4 candle on our charts, and we're in that lower wick zone of the previous H4. So we'll just have to wait and see what happens here. So, fellow traders, let us know why you don't do what you should do. I'd be curious to find out. And when you are sitting at your trading station, just always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.